Hello everyone and welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be teaching you guys how to pick the right zones when trading, as this is a very simple concept, yet a lot of people get wrong and they get stopped out. So if you are struggling with picking the right zone, make sure you watch this whole video all the way up until the end to get every ounce of benefit from it. Now we're going to be doing this guide with the same trade as last video, and we're going to be doing it because in this trade, which was a setup that I sent to my team, which ran for over 15 RRs, we can see that we had multiple POIs to enter from. Now, how did I know which POI was the most highly probable POI that was going to hit and give us a good trade? That is exactly what I'm going to be explaining in this video, so that you guys can know which POIs to enter from and get trades just like the one that I sent out. So if you guys do want to learn more about my concepts, the way I trade, the liquidity style of trading, the SMC style of trading, and the rest of it, make sure to check out the mentorship down below to get access to all of that. You will be also getting access to the new ALQ strategy, which is an unseen before strategy with an proven average RR of 3 RRs and a 50% win rate, and my new index strategy with very similar results. As well as that, you get weekly calls and signals. So yeah, make sure to check the first link in the description to get in on the mentorship. But without further ado, let's get right into today's video. Okay everyone, so the key thing when you have multiple order blocks and multiple POIs and multiple zones in one area is understanding what the high probability zone is within all of these POIs. And just to remind yourself what a zone that I consider a zone or a supply zone or demand zone is, the last up move or down move before which caused a break of structure, or in this case it would be the last down move before the up move which caused a break of structure. So in this case we have a demand zone over here, and this is the last down move before the up move which caused this break of structure towards the upside. Very simple concept. Now let's say I had 3 demand zones and I didn't know which one was going to be the most likely possible zone that will be giving me a winning trade. So which one is the best zone to enter from? I don't know which one to pick. You need to try and check off as many of these boxes as possible to give you a good zone and a highly probable zone, right? That is how you're going to differentiate between 2 to 3 POIs and find the highly probable POI. The first thing is a break of structure, which is just the simple thing that all of your order blocks should have. It should have broken previous structure in the desired move. So if you're looking at a demand zone, it should have broken structure towards the upside, and vice versa for a supply zone. Second thing is high volume. Again, a standard thing with an order block is that the move after the zone is created should be a high volume candle, often having fair value gap or imbalance, whatever you want to call it. Again, this is something very, I've talked about this many times on my channel before. Now, liquidity sweep. The zone which you're trying to enter from, or trying to find the confirmation from out of the many zones that you may be seeing, it's good if the zone has swept liquidity. So you can see with this down move over here, we have swept this previous level of equal lows. This will increase the chance of this zone being more likely to be a successful zone. Another thing we look for is inducement. Inducement is when we have a demand zone which is above the demand zone we're trying to trade, or a level of support or any sort of level where people might be trading from which is above the level we are trying to trade from. This will increase the chances of this being a winning trade. Another thing we need to think about is the liquidity to be grabbed. Liquidity to be grabbed is when we have equal lows and other forms of liquidity which is above our zone, which will increase the likelihood of this being a winning zone. The reason being is because this liquidity is going to act as fuel for the market. It's going to attract the market towards these levels. It's going to attract the market towards this level, sweep these levels, and then tap into our zone, and then move off towards the upside for its desired move. And lastly, very simple concept, the zone should not already be mitigated. So before the point of our entry, there should be no taps into the zone. So there should be no tap in here, there should be no tap in here. The price should never have come back into the zone except for when we're going to enter. And as you guys can see, price has never come into the zone except for when we were going to enter from it. These are basically the 6 1, 2, 3, 4, 5, 6. Yep, 6 key things that you need to remember, which is going to differentiate your order block from any other order block. Another thing you can look out for is order flow. So seeing that if this zone was a mitigation of a previous zone, and if that zone was a mitigation of a previous zone. This is again, I've got many videos on order flow, so make sure to check those out as well. But this will increase the likelihood of being a winning trade, as we know we are pro trend and we are trading with the order flow, which is just going to increase the chances of this being the right POI, the right zone to trade from. As well as that, positioning. Let's say we're currently trading within a price range which is between this low and this high. We don't want to be trading a demand zone which is all the way up here, which would be badly positioned in our price range. We want to be trading a zone over here towards the bottom end, because that is more logical. Buy low and then we're going to sell high. That's why I put the Fibonacci here, as you might want to put the Fibonacci in between your price range, knowing where the 50% mark is, where the 71% mark is, and where your 0 mark is. These are going to give you a good indication as to how well positioned your zone is in the market. So with these 7 tips, you now should be able to differentiate differentiate between the POIs and the zones that you're seeing, and how to pick the best one. What we're going to do is we're going to move on to Euro USD, and I'm going to break down exactly how I was able to differentiate between 3 zones, hone in on one zone, and that was going to be my high probability zone. So let's move on to that right now. Okay, everyone, here I am on Euro USD. And what we're going to start doing is we're going to start marking up the zones that I had been seeing on the, let me switch to the 1 hour here. I'm going to switch to the 1 hour, and this is the first zone that I had marked up. I had marked up this zone. And then I saw that there was a zone beneath it, all the way down here. And there was also a zone on the 30-minute time frame over here. Now, let's start honing in on each and every one of these zones and starting to see whether they follow the criteria that I mentioned earlier. First things first is that this zone, it may be the best positioned in terms of, in this range from here to here. This is closer towards 0, therefore it would be more logical to buy. But in this case, the positioning is maybe too good for its own good, because it's so far away from where price is that it's quite unlikely that price is going to be returning back to this zone. Another thing about the zone is that price has wicked into it already, telling us that it has already been mitigated and there is no need for price to return back to this zone. There is also no liquidity sweep. Maybe there's just this trendline sweep, but I wouldn't really, that's quite a weak sweep. There is no liquidity sweep. There is a weak break of structure over here of this previous high, and it's very weird because it hardly really breaks it. And yeah, overall, I'm not really feeling the zone, and it hasn't met the criteria of a high probability POI. So therefore, I will delete this, and I will start looking at the other 2 that I have. Now, this zone is a valid zone. Price is yet to mitigate it, and it's got high volume, fair value gap, all of the bog standard rules. However, what it doesn't have is it does not have a liquidity sweep. That's the first thing. In terms of liquidity to be grabbed, we do have a low over here, but there are no sort of equal lows that I can see resting above this level. In terms of the Fibonacci and things like that, I'd say this is quite a well-positioned zone, so we definitely tick off that box. Is there anything else that I can see is interesting about this? We do have a level of inducement here, so that could be another plus point. So that's what I'd say for that zone. Now let's take a look at this final zone over here, and let's analyze this. First thing I can see is that we have clearly swept a level of equal lows over here, giving us a valid liquidity sweep. That's the first thing. The second thing I can see is that this zone has not been mitigated, and it has fair value gap following it, telling me that this is a valid zone. This zone has also got a clear break of structure towards the upside, which I'll mark up right now. Again, telling me that this is a valid zone. Another thing that we have here is levels of liquidity which need to be grabbed. As we can see here, there is a strong level of equal lows, which is acting as liquidity, which needs to be grabbed. This is going to give us plus points for this zone, because price is going to sweep this zone. It's going to tap into here, which is the first zone that it meets, and then it will go in its desired direction, which is to continue this bullish market. So that's another thing. Liquidity sweep, liquidity to be grabbed, break of structure. Another thing we have is this level of inducement. There may be some traders who are looking to trade from this level. Therefore, any early buys will be induced in this market after price comes into this level. Is there anything else that I wanted to mention here? Oh yeah, so I also wanted to mention that there is a level of order flow being created because price has tapped into what looks like a previous demand zone over here through our move over here. So as we can see, in comparison to the other two zones that we had, this zone has way more confluences and way more stuff to analyze, telling us that this is a higher probability POI and that we should be looking to take entries from this level. That being said, I can still keep this in my analysis. It just means that I'm not really expecting price to respect this, and I'm expecting price to respect this level instead. So now we can play price, and we can see price respects this level, continues its move towards the upside, giving us a new break of structure. And if someone had entered aggressively from this level, so without even taking confirmations, you still would have gotten a beautiful 1 to 5 risk reward trade. So everyone, that concludes the guide for today's video. Thank you all very much for watching. If you have any questions, make sure to let me know in the comments. If you did enjoy it, make sure to leave a like. If you would like to understand more about this trading, including liquidity style trading, the new ALQ strategy with a proven win rate of 50% and an average RR of 3, which would make you very profitable, make sure to check the first link in the description for the mentorship for all those benefits, including signals, weekly calls, and all of the things I mentioned before. I will see you in tomorrow's video, as I am going to be doing a 10 upload day series on the channel. So yeah, stay tuned for tomorrow's video, and I will see you in the next one.